Anonymous Bitcoin analyst and former institutional investor has recently reacted to news of Tesla's sale of $936 million worth of Bitcoin, which was announced on Wednesday. During an earnings call, Tesla CEO and product architect Elon Musk revealed that the company had sold 75% of its Bitcoin holding for almost $1 trillion. The Musk said the sale was to shore up the company's liquidity. There are concerns that the sale was linked to the company's green ambition. In May 2021, Musk triggered a Bitcoin sell-off when he criticized its energy profile and suspended Bitcoin payments for Tesla. This May, Tesla also got booted off the S&P 500 ESG index, which focuses on companies that prioritize environmental, social, and governance issues. This was quite a blow to the electric vehicle carmaker, especially since Exxon got the top spot on the list. So the almost $1 trillion Bitcoin sale could be part of Tesla's plans to get back on that list. In a recent string of tweets, Plan B reacts to Tesla's news and the ongoing decline in the market. The independent Bitcoin analyst and creator of the Bitcoin stock-to-flow model compares the ongoing dip to a generational buying opportunity and gives a midterm price prediction for the world's largest cryptocurrency. Please watch, like, and share this video. Also, ensure you give it a thumbs up, drop your comments below, and subscribe to the channel. Please enjoy the video. In his first tweet, Plan B compares this current market trend to previous bottoms that preceded massive price gains. Here's his tweet. In hindsight, it's so easy. This is either a generational buying opportunity like 2011, 2012, 2015, and 2018 to 2019, or this time is different and the world ends. At the end of 2018, Bitcoin plunged to a record low of $3,500 from a peak of over $19,000 a year before. 6 months later, the crypto asset had gained over 300%, soaring to over $13,000. The crash to $3,500 was definitely a great buying opportunity for those who took the plunge, and Plan B believes another great buying opportunity has opened up for investors with high risk tolerance. The true diamond hands are buying and looking forward to another all-time high, while weak hands are panicking and calling for the end of the world as we know it. An interesting reply to Plan B's tweet raises a very important issue. Eugenio Benetazzo, the CEO of Yaochain, an Italian digital asset management firm, asks Plan B if Tesla sold Bitcoin to comply with the ESG criteria and how it would impact Bitcoin and Plan B's S2F if other megacorporations decide to follow the same approach. Here is Plan B's reply. Yes, ESG is an obvious attack vector on Bitcoin and not only Bitcoin. Since proof of work is equal to Bitcoin, this is a battle that must be fought. Proof of stake is certainly not the answer, since that does not solve the Byzantine generals' problem and brings us back to fiat. The Byzantine generals' problem is a game theory problem that describes the difficulty dispersed parties face when trying to reach a consensus without the availability of a trusted central authority. In distributed computing systems, this problem arises when components fail and there is imperfect information about the failure of the said component. Since the problem is unknown to the different parties and there is no central authority, there won't be a fix, and the system essentially becomes faulty. Decentralized systems like the Bitcoin network are susceptible to the Byzantine generals' problem because of the lack of a central source of information or a way of confirming information from network users. But Satoshi solved that problem when he created the Bitcoin network. The proof-of-work consensus mechanism requires miners to validate blocks and compete with other miners to solve cryptographic puzzles to produce blocks. Since a network member has to show proof that they put a lot of effort into making each block, only accurate information gets added to the blockchain. Furthermore, removing a block from the blockchain after it has been added is impossible, making Bitcoin's history unchangeable. Proof-of-stake systems solve the problem by asking users to lock their funds in the form of escrow and punishing dishonest users through the loss of their funds. This idea is still taking root in the industry, especially among Bitcoin maxists like Plan B, who strongly believe in the superiority of the proof-of-work consensus. Let's get back to Plan B's tweets. In his most recent tweet, the pseudonymous analyst sheds more light on the two types of investors we have right now. Here is the tweet. A tale of two investors. People in profit, 2009 to 2020 investors who bought at an average price of $8,000 have approximately 60% of all Bitcoin and are waiting for the next bull market. People in loss, 2021 to 2022 investors with approximately 40% of all Bitcoin bought at an average price of $43,000 and fear that this time is different. What group of investors do you belong to? Are you waiting for the next bull market and a new all-time high, or convinced that this is the end of significant price gains for the world's largest cryptocurrency? Please drop your replies below. There is a reliable way to trade Bitcoin with up to 100 times leverage. Margex has a simple registration process that takes less than 30 seconds, and you don't have to submit to a KYC process. Just enter your email and preferred password, click register, and you are all set to start trading. With its multiple layers of protection for your personal details and assets, Margex is easily one of the safest cryptocurrency exchanges on the market. In addition to the standard security protocol, Margex features the MP Shield system, a real-time machine learning-based system that helps prevent price manipulation and fraud. The platform also features the friendliest user interface, especially on the trading terminal where all the magic takes place. On the left side of the trading terminal, you can see the order submission menu. Here you can set a limit on a trade, automatically execute instant buy or sell orders, or set a trigger price for your orders to avoid losses. You can also input the order size and choose preferred leverage of up to 100x and a minimum of 5x. Margex also features cross margins so users can avoid liquidations across all relevant open leveraged positions. You can easily switch between cross and isolated margin by clicking these icons. Lastly, on the trading terminal, you can see the trading fees 0.25% for longs and 0.05% for shorts. Margex has no hidden commissions and competitively reasonable fees. Between now and July 31, the platform is also offering a 15% bonus when you deposit $300 or more. To get this bonus, click on Wallet at the top of the home page and click on Use Promo Code. Enter the promo code SAVVY15, confirm, and you will immediately get 15% of the eligible deposit. Click on the link in the description to get started and enjoy all the wonderful benefits. Like this video and subscribe. We are still trying to get to 150,000 subscribers and appreciate all the help we get. Thanks for watching our videos.